welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on US technology stocks, and my guest is Greg Hahn, the Chief Investment Officer at Winthrop Asset Management. Well, tech stocks have taken a battering so far this year, caught up in a rotation out of growth into value on expectations of aggressive action by the US Federal Reserve. The S&P 500 Information Technology Index counts Apple and Microsoft as its top two components. It rose 33% last year as the pandemic continued to accelerate demand for hardware, software, and the semiconductors needed to run them. But since then, the index has lost 13% in the year to Wednesday, well into corrective territory. These high-flying stocks have also had sky-high valuations and are in theory more prone to the impact of higher interest rates. The Federal Reserve once again spooked the market on Wednesday when Chairman Jerome Powell had this to say about Fed policy.
The economy is much stronger and inflation is much higher. So, and I think that leads you to, and I've said this, being willing to move sooner than we did in the last time, and also perhaps faster.
But many, if not most, of the companies that make up this sector are booking record profits, have proven business models that were resistant to even the worst economic downturn the world has seen in generations. So how will they fare in 2022? Let's ask Winthrop Capital Management's Greg Hahn. Greg, hi. Let's start then with the impact of Fed policy. How will it impact this sector? Is the recent sell-off justified?
So we're living it. The recent sell-off is justified. The question is the magnitude of the sell-off. So the issue is the Fed. How quickly will the Fed move to raise rates? And we actually think it's limited. We think the market's a little bit overdone here. The Fed's going to move slowly, similar to what they did in 2017 and 18 when they raised rates during that period of time. But the economy. Chairman Powell is representing the economy is strong. On a relative basis, it is, but the stimulus money is out in the system. There's no more coming. And that's the real issue that we've got to digest. And that's why we think there's a natural ceiling to how high interest rates will actually go.
Given how highly valued tech stocks are and that the pandemic that's been so good for some of them is coming to an end now, plus the supply chain problems that they're dealing with, do you think tech stocks have also reached a ceiling?
So in some regards, yes. In other areas, we think this is actually a really good entry point for some of the large cap tech stocks. So some of the names like Apple and Microsoft we're very constructive on. There's other names, and we do own some of them, Intuit, Spotify, Match Group, where the revenue stream isn't as strong. So those are the ones that have gotten hit more.
Let's break this down then into sectors. Obviously, there's software, hardware and semiconductor chips, roughly. So which part of the market is set to do best in 2022?
Well, so in the large cap space, in the software space, we're looking at we're counting Microsoft in that space. I don't know if you're counting Apple as a software company or hardware company, but then on the chip side, we're in Micron and Qualcomm. So those would be places that we would look for we're invested in right now.
Given the chip shortage then, Greg, should investors be focusing on semiconductor companies?
Yeah, there's a couple of reasons why the semiconductor is, I think, a really good play in 2022, and it's really a play on demand. We're going to see an increase in auto production in the second half of the year. The build out of data centers around the globe continues. So there's real strong demand for these. And the two areas are Micron, which has a real strong presence in the data center area, as well as a growing presence in autos, and also Qualcomm, which dominates in the smartphone market. So with the transition to the iPhone rollout, Qualcomm will benefit from that.
So how would you advise retail investors to play the tech sector at the moment?
So in the large cap names, and these dominate the S&P 500 index. Apple, we love Apple's a great company. So we're in the midst of this new upgrade, this i13 rollout. I think they're going to show a really strong holiday shopping season. I think it's over 40 million units that they place. But with that, their services business is what's growing. So recurring revenue is the theme. This is not just about tech. This is about business models that have recurring revenue built into them. And so that's the music business, the iCloud business for Apple, and also Apple TV, which we're big fans of Ted Lasso. So just wanted to point that out. But it's real strong.
Thanks so much for that insight, Greg Hahn, CIO at Winthrop Capital Management. Well, before I go, let's take a look at some of the top stories in this space. Intel posted record quarterly revenue, but warned supply chain problems will translate into earnings that fall short of Wall Street expectations this quarter. CIO Pat Gelsinger said he expected the supply constraints to persist this year into next, as the, quote, unprecedented demand for chips continued. The comments came after Intel posted fourth quarter sales of $19.5 billion on a 20% surge in sales in its data center business. China's market regulator has conditionally approved AMD's $35 billion all-stock purchase of Xilinx, taking the 2020 deal one step closer to completion. The approval came with some conditions, including the safeguarding of interoperability of their chips with Chinese products. The approval will come as a relief to both companies following a number of mergers in the sector that were blocked due to opposition from US or Chinese regulators. And Samsung Electronics said it aims to win a bigger share of the smartphone market this year with more 5G models. The world's largest maker of memory chips and smartphones forecast a recovery in demand for tech devices, although it cautioned about ongoing challenges from those supply chain issues and COVID-19. Samsung said fourth quarter profit rose 53% to $11.6 billion, helped by brisk sales of memory chips. And that's your roundup of the US information technology sector. I'm Elena Casas, and this is Reuters.